What are candlestick charts and what is price action? There are three things to note about candlestick charts: the color, the body, and the wick. Typically, a green or white candle would be bullish and a red or black candle would be bearish. The body consists of the opening price and the closing price, and finally the wick could either be a high wick or low wick. Now on the left hand side we have a bullish candle colored in green. As you can see, the closing price is higher than the opening price, which means the price at which the candle closed was higher than the price it opened at. We have also marked out the body of the candle in blue, as well as the high and the low wick. And on the right hand side we have a bearish candle. The only difference to note is that the closing price is lower than the opening price. Here's a real world example. If you look to the very left, you can see that the first candle is a bullish candle, the second a bearish candle marked in red, and then we have a series of bullish candles after that. What is OHLC? It stands for the opening price, the high price, the low price, and the closing price. These are very useful for mapping out high probability reversal zones or significant levels on a chart. Some examples would be marking out the yearly highs, yearly lows, Monday highs, Monday lows, the daily high, daily low, or simply the daily closes. Let's talk about time frames. The time frame you select on your chart represents what each one candle shows. For example, if I select the 1 hour time frame, it means that each candle on my screen shows 1 hour worth of data. If you looked on the left hand side, the time frame that we have selected is circled in red. In this case, it says 1 hour. Now I'm using TradingView, so this will be slightly different depending on which charting software you use. It is important to understand that higher time frame candles consist of multiple lower time frame candles. For example, one 1 hour candle could consist of 2 30-minute candles, 4 15-minute candles, or 12 5-minute candles, and so on and so forth. You can see that we are currently on the 1 hour time frame, so the last candle represents 1 hour worth of data. If we now switch to the 50-minute time frame, I have marked out the 4 50-minute candles that make up the same 1 hour candle from the previous chart. Hopefully it's starting to make a bit of sense now. Candle closes are very important. Usually the higher the time frame, the more important it is to wait for the candles to close, because a lot could happen from the current time to the time the candle actually closes. My recommendation for new traders is to stick to the daily time frame and wait for the candles to close before making any trading decisions. So we're currently on the weekly chart, so each candle represents 1 week worth of data. If you look at the most recent candle, you would say that the week is currently looking bullish. However, if you look to the very right, beneath the price of Bitcoin, it says 2 days and 3 hours. What this means is that there's currently 2 days and 3 hours left before the end of the week and the candle closes. It's important to bear this in mind because sudden price changes happen all the time for a number of reasons and can turn a good looking chart into a bad looking chart really fast. Thus, it's always a good idea to wait for confirmation or the candle to close. Here we have the same example on the daily chart. If you look to the right, it says we have 2 hours, 56 minutes and 59 seconds left before the daily chart closes. Of course, the lower the time frame, the less important it is to wait for the candle to close. Candlestick patterns. There are many patterns out there, with some of the more common ones being hammers, shooting stars, dojis, engulfing, with many more. What I do want to say is that it's a common beginner mistake to learn a new candlestick formation and start to look and trade it all over the chart without any context, quickly blowing your account. For example, you do not want to be looking for bullish candle patterns at resistance in a downtrend. Just like you do not want to be looking for bearish candlestick patterns at support in an uptrend. If you do want to learn more about candlestick patterns as well as how to trade them correctly, click on the top right hand corner and watch my video on that. To recap today's video, don't forget to zoom out, use the daily chart or higher, and mark out key significant levels on the chart. My favorites would be the daily high, daily lows, as well as the Monday highs and Monday lows. If you learned something useful and new in this video, don't forget to give us a like and subscribe so you won't miss future educational content. If you do have any questions or comments, leave them in the comment section below.